The famous French writer Victor Hugo once said, "There is one thing stronger than all the armies in the world, and that's an idea whose time has come." That seems to be the case of sustainable finance and ESG, or environmental, social, and governance. Both approaches, arguably on the path to become a business paradigm, have taken a hold of the market and are moving from niche to mainstream by now. The term ESG was first coined in 2005 in a landmark study entitled Who Cares Wins, authored by Ivo Knopfel. Unlike SRI, or socially responsible investment, that has been around for longer and is based on ethical and moral criteria, ESG investing is based on the assumption that the factors it embraces have financial relevance. With a new paradigm comes new regulation and reporting. Asset managers have to be accountable for their ESG products when facing investors and regulators. In this episode of TechTalk, Carla and I talked to Ashraf Ammar, director at PwC Luxembourg, about the importance of ESG data sourcing and analysis for adequate reporting. Let's get started. Welcome to the show, Carla.
Hello, Luis. How are you?
I'm very good. I'm very, very good. Well, we are recording this on Monday, and I am a bit sleepy, but
so
it's
am
fine. So you are, okay. And today, we have the pleasure to welcome Ashraf Ammar. Hello, Ashraf. How are you?
I'm very good. Thanks, Lewis. Thanks, Carla. Hi.
Hello. No. Thanks for joining us.
Exactly. Thanks for joining us. So today we are discussing an absolutely, truly hot topic in Europe, ESG, but more specifically ESG data. Okay. So ESG stands for environmental, social, and governance, or governance also means it refers to corporate governance, and it's actually a set of rules, I would say, an approach for investments and companies to report on their actions on sustainability. So I give you room for Carla to go for the first question regarding this matter.
Yes. So I would like to kick off the episode with a very basic question. What is ESG data and why is it important? Why is it in everybody's minds in the finance industry, especially in the banking and asset management sectors?
Okay, it's a very good question. So ESG, as you mentioned, stands for environmental, social, and governance. And this was in the past a kind of a niche market. It was initially an initiative taken by some asset owners and asset managers to go deeply, not to look only on the financial performance of the companies, but also to look at the environmental and social impact of the underlying investments on the society and the environment. And they started actually to have different views and different definitions of what E and S and G means. And that's why it was not a kind of standardized type of industry and a topic. So each and every single asset owner or investment manager, they try to define the E, S, and G from their own perspective. So let's say if I have an investor coming from the Middle East, they will always consider that fossil fuel is very eco-friendly and it's helping the environment because the main industry, the mainstream in this region is based on fossil fuel. So you cannot go and tell them that fossil fuel is not an eco-friendly type of activity. This will kill the business over there. The same if you go to the US, for example, and you say that the weapon industry is not ethical. You might find some people also looking at you and saying, no, it's very ethical and it's according to our constitution, it's allowed. So no, weapon industry is very legal and very ethical. So the different views on the ES and G was really very broad in the past. And it was depending mainly on which level of engagement each and every single asset manager wanted to get involved and engaged. So they would like only to eliminate the different type of activities, or they would like to go much more deeper to see the amount of carbon emission, the data privacy, if there is any data privacy, if there is a supply chain that respects the child labor, all these kind of details. So it was really different from one investor to the other.
So it was depending on the goodwill of the
exactly
of the company. Okay,
exactly. So it was at the very end, it was a kind of a marketing tool for the financial institutions and the asset managers to promote much more ethical products to their clients who are always looking for ethical products on top of the financial performance.
Okay, and whenever we refer to data, what comes to my mind is governance, because if there is no process established to gather, analyze, and report on that data, then everything becomes messy. So the question is actually very straightforward: is how urgent has become the need for ESG data governance?
So if for asset managers and for any financial market participants, they need ESG data for the screening. So before looking for the investments, they need to understand what are the non-financial data that they need to collect on those type of assets. And it should normally differ from one industry to the other. And by taking a decision and doing the stock picking, then it goes to the compliance, and then it goes also to the risk management and the distribution to the board of directors. So there are different levels within the organizations that they need to deal with this kind of ESG data. So you need to give the right access to the right function at the right moment in order to have the full visibility on what you are doing, especially on the ESG, because most of the clients, they are calling it, or most of the people, they are calling it non-financial indicators. It's not financial anymore, and it's not 1 + 1 = 2. There are certain measure and thresholds that differ from one person to the other. It could be acceptable from the portfolio manager, but not acceptable from the compliance officer or the risk management team. So there are certain level of governance and ways to be put in place in order to give the right access at the right timing for the data.
And because of this variety of type of information you mentioned, I also guess this is not a matter of responsibility of one department. Probably several departments are involved. So it's not. I don't know. I'm saying an example. I'm referring to an example. It's not the sustainability department only. Maybe sustainability, HR, finance. It's like that. Okay.
Yeah, exactly. So it goes across the value chain of any kind of industry. So if we are talking about financial market participants, they need the ESG data on the value chain of the investment investment industry value chain. But also on the corporate side, you need also to think about the diversity, you need to think about the turnover, you need to think about the carbon emission, your impact on the environment. So there is a different dimensions on the corporate level and also on the product level.
Okay.
Well, we've done some reading to prepare for this episode, and according to what we've read, most ESG data is normally self-reported, so companies do it themselves, and it's blamed for lacking some transparency and comparability in terms of. So there is no really standardization. Is this a bold affirmation?
Yeah, it was till recently. So in the past, corporates, because this is the starting point of the data collection or data reporting, the corporates, they used to issue their own sustainability reports according to different standards. And there was no obligation on each and every single corporate, according to its industry, to report a certain amount of data. So starting from this point, everybody was on a goodwill position. They wanted to report something around ES&G, but from their own perspective and their own priority.
Exactly. So they were reporting on metrics that,
were looking good.
Exactly.
Could be seen like that, but also some people, they were also transparent, but there was no kind of standardization of what are the data to be reported. So if I have the two companies, they are working on the same industry, in the same region, targeting the same client base, each one of them can report different ESG data than the other. So there was no kind of standardization. But recently with the EU Action Plan, there is a kind of pressure on the corporates to standardize the type of information and based also on the new EU taxonomy, the new regulation that will be that is coming in place this year. There is a standardized type of information that needs to be reported according to the type of industry. So it's very industry specific. So if I'm involved in certain industry, I need to report certain type of data, even if it's not relevant from my perspective, but according to this kind of framework or these guidelines, I need to report this kind of data, which will be available for everybody.
And actually, my question is linked to the previous one. So, if companies were self-reporting, the information was coming from exactly from where? Do you have any idea of how where they collecting this information? Do they have, I don't know, sourcing system, a department in particular doing so?
Okay, so if we are talking about the data itself, first, normally it should come from the corporates and the normally listed companies in the big stock exchanges. They are obliged to report certain ESG data.
Mm-hmm.
And we found out that there are some number of data vendors in the market who are collecting those publicly available information in order to resell it to combine it and to resell it to the end users, could be asset managers or asset owners. There is also another trend where big asset managers who are heavily engaged in the underlying investments and assets, they have direct relationship with the underlying assets in order to gather whatever information they needed for their decision-making process from an ESG perspective.
Okay.
Well, that was my next question. So you've just answered it. Thank you.
No worries. But again, just to elaborate a little bit more on this, there are different ways of collecting data, and it depends always on the availability of the data. So if we are talking about listed instruments, normally you will find certain amount of data available on the stock exchanges and the publicly available information because of the transparency and the obligation on those companies to report certain amount of data. But the challenge was for the non-listed type of assets like private equity, real estate.
Exactly.
You need to be
alternatives, let's say.
Alternatives, exactly. That's the right term. So alternatives, you need to be in direct contact with your assets in order to push them to report whatever kind of data that you need for your decision-making process.
And is this an easy process to be in direct contact and gathering the data that they need?
It's a challenging process. It depends on the location of the asset. If you have an asset manager based in Europe and they are investing in private equity in Latin America or in Asia, Africa, you need to have a kind of a process where you can enforce those underlying assets to report these kind of data. And the data normally are sometimes needs to be audited and validated by third party. So it's a kind of a long process. It's not an easy process, but it's moving. People, they started to understand that they need to put in place certain policies and procedures to prove to the investors and the stakeholders that the ESG data are really properly reported and validated.
So I remember some weeks ago, Ashraf, you kindly helped us write a blog on this subject, and I remember you referred to a trend between that is happening now in terms of ESG data and ESG data collection and processing. So can you reveal to the audience which is that trend?
Yeah. Why is that? Because most of the data vendors, they have certain capacity in terms of coverage. So if you are dealing with one of the data vendors, they can have a coverage limit of certain number of listed securities. But if you are still investing in emerging market or frontier market where those type of data are not really available, then you need to have your own ESG research team who will be engaged was to do the analysis, the collection of data from those sources, and it started to become a kind of a complementary function to the ESG data collection. So you collect data from ESG data vendors, and also the ESG research team, they crunch this data, they analyze it, they validate some of them, they ask much more questions from the data vendors and also the target assets, and they come up with their own derived data. So the big asset manager, normally they are not only relying on data vendors, but they have their own ESG research team to be able to analyze this data and to come up with their own set of data that is going to be used later on in the decision-making process.
So it's a sort of they are blending
Exactly.
both parts. Okay, that's interesting. And you maybe wonder, the audience maybe wonder why these guys are talking about ESG data in a show called TechTalk. It's because when you refer to data, it's obligatory to refer to technology, because to process all that information, which is not 1, 2, 3 numbers, it's dozens, hundreds, thousands of millions of data that are running. Yeah. So there should be a technology behind that. And actually that is that's the next question that Carla will ask, I guess.
Yes. You guess?
Yeah, yes.
Yes, you're absolutely right. There must be some technology behind the data for collection and for processing and analyzing. So my question is, I think that collecting a diversity of variables of data for ESG reporting can be quite tedious or time-consuming. And from CO2 emissions to diversity and inclusion metrics, are there technologies to help market players to comply with ESG reporting?
Yeah, so there are a number of data vendors right now. They started to use drones, for example, to calculate the amount of carbon emissions, the use of energy, the waste management. So there are different technologies right now that is currently used to cater this type of data for the users. And it's still progressing, and we see the kind of competition between different technology companies and artificial intelligence companies. They are speeding up to see how they can offer this kind of data on a timely manner, on an accurate way to the end users. And I think there is a huge area for improvement on that respect, and also the use of artificial intelligence to predict the performance on the future based on the non-financial indicators, using the historical trends and the incidents that happened in the past.
Oh, that's very interesting.
Yeah, and AI is everywhere, obviously. It's obviously, and we have a couple of episodes on AI, so just you can go to our website and find them and listen to them, because they are very nice and insightful. So I will move to the next question, and it's actually about the decision-making process when it comes to ESG data. Now, it's not only about investment decision-making or decision-making in investment, but it also has to do with risk management. So could you explain to our listeners why?
Yeah. So the impact of the ESG, but the ESG factors on the decision-making process could be significantly high, and we can refer to a number of incidents that happened in the past. For example, Facebook, when there was a scandal in the past about Facebook and the customer privacy data privacy, this was really a scandal that was originated from a social and governance point of view that impacted the performance of the company and the financial performance of the company. The same as Volkswagen. So The risk managers normally they should consider, again, this is an obligation as per the new regulation, the EU regulations that was enforced by the European Commission. Asset managers, they should integrate sustainability risk within the risk management process of any financial market participants, because there is an impact and there is a correlation between the sustainability risk, the ESG risk, and the financial risk, and definitely it will impact the financial risk in the long term.
You know what? This is it's a quick anecdote. So I have a friend in New Zealand, and she said it's about real estate. So she mentions that, she told me just 2 weeks ago, there are areas that the government has already said, if you buy a property here, the risk is very high because of climate change.
Yes.
Because it's really close to water source and the risk of flood and having all these problems. In the near future, I'm not saying from now, in 10 years from now, it's in the near future very high.
Oh, wow.
So things are going really, I don't want to be negative, but seriously wrong. And we need to really pay more attention to all the environmental.
Yeah, it's the same for the fires that happens in the forest, the floods, the earthquakes, the volcanoes, all these kind of areas that are considered to be risky from a climate point of view. Asset managers, they started to think about where their assets are going to be located and how it will be impacted by those kind of environmental changes.
Exactly. It's worrying, but let's keep the faith. And also because these kind of actions or these kind of initiatives or ESG approaches or SDG and all these things that are going on, especially in Europe, I think the continents leading this process are pretty positive, I think. So
I have a question, actually. Might be a silly one. But we are talking about asset management companies looking into their assets, but don't asset management companies themselves need to look into their ESG reporting?
Themselves, yes. Again, it's a very important topic. So asset managers, they are part of their obligation to comply with the European regulation, the Sustainable Financial Disclosure Regulation, and also the proposed amendments to the UCITS and EIFMD directives. They need to integrate sustainability risk and to start reporting on sustainability risk, which means that they need to have a way to collect the ESG data, process the ESG data, highlight the sustainability risk or the ESG risk, and then to be able to report these kind of risk reports to the stakeholders. That could be the asset owners, investors, internally within the team, because it should be also used by the distribution team to be able to understand what level of risks that they have embedded in their portfolios in order to be able to sell the products and to challenge the investors, and also to the regulators.
All right. And I guess lead by example as well.
Exactly.
Well, while browsing our PwC digital store, we discovered that there is a solution called ESG risk assessment. What is it? And can you tell us the story of how it was developed? Because you were behind it, right?
Yeah. Yes, you're right. We, PwC Luxembourg, we started to think about the ESG when the ESMA issued a draft proposed amendments to the UCITS and the EIFMD, and one of the major amendments proposed at that time was to integrate sustainability risk. And we put ourselves in the shoe of the risk officers of the management companies and asset managers, how they are going to integrate sustainability risk. We fully understand that the portfolio manager, they might have access to ESG data, and based on that, they take their own decisions, but they pass the information to the risk managers, who not necessarily are capable to understand those ESG data. And starting from June 2019, we started to work internally to develop a tool, an online tool, where we have access already to a data from data vendors, and also we are following certain sustainable frameworks depending on the underlying assets. So if we're talking about corporates, we are using SASB framework. If we're talking about real estate, we are using EPRA framework. If we're talking about government bonds, we are using SDGs. The objective of this tool actually is to highlight the ESG risk that's material for each and every single asset, depending on the nature and the activity of the underlying asset, and to present those type of risks in a format that can be used for reporting.
So you tailor the risk depending on the type of investment?
Yes, okay. Depending on the nature of the asset class. So if I have a private equity, corporates, listed companies, bonds issued by corporates, I need to identify the nature of the industry or the type of industry that of this asset that's issuing this instrument, whether equity or bond. And also on the real estate side, if I have commercial building, logistic building, infrastructure, so there are some differences between what I should look at for each and every single asset.
Well, that sounds. I guess there was a pool of people working behind. I mean, several departments, from data analysts to project managers to investment specialists,
exactly.
And I guess also people who know about the regulation.
Exactly.
And now, is it up and running, or do you still continue to improve it, to make changes?
So the tool is up and running right now. So we are generating reports to some of our clients, and we are also enhancing the tool to also offer some much more type of reportings and give much more flexibility depending on the needs of the asset or the clients. Some of the clients, they want to have a benchmarking analysis. Some others, they want to have a mapping with SDGs. So it differs from one client to the other. So we are enhancing the tool based on the comments and the feedbacks that we are continuously receiving from our clients.
Which is you are running a nice UX design process. and also when anyone, no matter which company or person develops software that it's good and it works, the upgrading process is basically endless. Yeah. You will have to improve it based on what people say or new things that are going on. But I have a final question for you. First of all, thanks a lot for all this enlightening information, and I think everybody wins with all this nice, easily digestible information you share with all of us. But I have one last one, and always is in my mind. It's the feeling of asset managers around ESG. Do you feel that they feel it like a burden? It's something like, oh my God, we have to do this, or they see the positive side of this for the environment, for our Mother Earth, for the society in general, and for the future, or it's always like a sort of negative approach?
No, it's like anything that's new to you and to anybody. You start to look at it a little bit with a bit of attention, and to be with a bit of cautious to better understand what's really needed and what will be the impact. But when you really understand what's behind ESG, and when you compare, when you look back in the history, the performance of the ES and G funds and financial instruments in the market, how do they perform compared to the conventional ones? You will see that there is a huge opportunity in the market, and then you will get more and more attached, and you will realize what could be the real impact, not only on the financial performance, but also on the environment, on the social and side, and also in terms of transparency, being transparent with your clients, and to be able to share whatever kind of information that will add value to your products.
That's very good.
That's good news. Yeah, I guess
Indeed.
in the beginning, we are all aware of the number of regulatory compliance. In general, financial services have to go through. It's increasing. It's never decreasing. So ESG in the beginning may have felt, or still maybe felt like another heavyweight among the others I have to comply with. But if this point of view is changing also because they realize the positive side of this for everyone, that's a good sign. That's a very good sign.
And it's now becoming mainstream.
It is becoming mainstream, and also I recently was reading an opinion on how ESG that comes from basically it's driven by Europe can influence the entire world. Well, some voices say yes, it could be. Some voices says, well, maybe it's a bit arrogant to think that way, that Europe can influence the entire world, but it could be like the GDPR did, for instance, and a lot of companies now are complying with the GDPR. But let's see. Anyway, so is there any final word, encouragement, quote you want to share with our audience, Ashraf?
Yeah, it's. I think the most important thing right now is to try to find the right source of ESG data. Try to design internally how you are going to use this data, how you are going to analyze this data for your investment decision process and also for your reporting. So it's time actually to move. There is no time to waste. The regulations is coming very soon, and we need to be ready in order to comply with the regulation and also to capture part of this market opportunities that's available.
That's very nice. Okay, so thanks a lot, Ashraf. We know you are on holidays, and you actually kindly accepted the invitation today, and that's very nice. So, well, this is TechTalk. As you may know, this is technology made simple over a cup of coffee. Exactly.
Oh, wow.
So I hope you had a coffee when you were listening to this, because I was. Honestly, I have it here. A nice espresso. So have a very, very nice week, and thanks a lot for tuning in once again. Ciao. Thanks, Ashraf.
Thanks.
Ciao.
And that's all for today. This is TechTalk, technology made simple over a cup of coffee. Thank you for listening, and until the next episode.